All right, everyone. Thank you for joining us here on our next edition of the Franchise Your Business webinar series. My name is Tom Dufour. I am the CEO of Big Sky Franchise Team. And if you're new to us here on our overview of what the franchise, of what our current franchise sales and marketing trends session entails, well, our current franchise sales and marketing trends is going to cover a broad, wide range of topics, all related from stemming from macroeconomic data down to more near microeconomic data as it specifically relates to the small business community and to franchising, and how all of these things play into what you're doing from a franchise sales, franchise marketing strategy to make sure that you are dialed in the best that you can to be communicating timely and relevant information for prospective franchise buyers. And in addition to franchise sales, but this data and information can be relayed back to your franchise system as well to be prepared for what economic conditions may be on the horizon. So with that being said, I am going to share my screen, and we're going to jump right into this. This is a quick hit. And what I like to do, I start from broad, more macroeconomic data, and then zero in onto the franchise community and how all of this information may impact what you are or aren't doing, or at least give you some sense of what's going on. So let's go ahead and jump right into that. So the first screen that we always like to share is from the Institute for Supply Management. And they do 3 reports each month called Manufacturing PMI, Services PMI, and Hospital PMI, hospital being the newest. So we'll take a look first at the Manufacturing PMI. And I like manufacturing because it tends to be a leading indicator. So you can see here, PMI is at 46.9%. And it says the U.S. manufacturing sector contracted in May as the manufacturing PMI registered 46.9%, 0.2 percentage point lower than the reading of 47.1% recorded in April. This is the 7th month of contraction and continuation of a downward trend that began in June of 2022. That trend is reflected in the manufacturing PMI. Their 12-month average is 49.4%. So on this chart, you can see that the decline really started back in about mid 2021. It was kind of up and down a little bit, but you can see this trend line's pretty clear here for the last almost on the dot 2 years that it's kind of been on the steady decline. 2022 was very noticeable. And then here we are in 2023. 50% marker on this is the economy break-even line, and 48.7% is the overall economy 50% is the manufacturing economy break-even line, and 48.7% is the overall economy break-even line. Again, the significance of manufacturing purchasing is that manufacturing tends to be a leading indicator. So what's happening in manufacturing tends to lead the way, so that you'll see this in other reports and sectors. It could be 6 months to 12 months, maybe 18 months down the line. So this is where we're at, and it's kind of hovering right at or just under that break-even line. The next report here is the services industry. Now, services is the largest sector here in the United States, and that accounts, it says the PMI is at 50.3%, and the overall services break-even line is 49.9%. So it's just above that break-even line. And the report says in May, the services PMI registered 50.3%, a 1.6 percentage point decrease compared to the April reading of 51.9%. A reading above 50% indicates the services sector economy is generally expanding. Below 50% indicates it is generally contracting. So again, this is right above that break-even line. And as you'll see with some of this data, it's just mixed, and it's been this way for several months now, actually probably a year or longer, where you have just some mixed data. It's up and down. So again, and I think that that's kind of the environment we're in right now. It's just kind of mixed and kind of as a whole, uncertain. It's relatively flat. So now we have the hospital report, and that's reading at 49.1%. And it says economic activity in the hospital subsector contracted in May after 35 consecutive months of growth. So the hospital PMI registered 49.1% in May, a 6.2 percentage point decrease from the April reading of 55.3%. So you can see that's a big drop off from last month. And the thing that I like to point out in 2021, if you're viewing this, you can see that it was a sharp increase for the most part throughout the year. 2022, it fell big time early in the year, but it was really up and down, kind of like a yo-yo, just zigzag up and down all year. 2023, it kind of leveled off, it looked like, and it started trending up a little bit, and now it really went down here. So again, hospital sentiment, just some information for you to be thinking about there, depending on what industries you work in and how that might apply to you. The next part here that we like to take a look at is the unemployment rate. And this is from tradingeconomics.com for the United States unemployment rate registered in May of 2023. And it shows we have an unemployment rate of 3.7%. So it did go up, and it says the unemployment rate in the U.S. increased to 3.7% in May of 2023, the highest since October of 2022, and above market expectations of 3.5%. Despite this uptick, the jobless rate remained historically low and suggested the labor market remained tight. Number of unemployed people increased by 440,000 to 6.1 million, and employment levels declined by 310,000 to 160.72 million. The so-called U6 unemployment rate, which also includes people who want to work but have given up searching, and those working part-time they cannot find full-time employment, rose to 6.7% in May, also above forecasts of 6.6%. So the labor force participation rate was unchanged at 62.6%, remaining at its highest level since March of 2020. So hopefully we can continue to increase that labor participation rate to get it back to where it was prior to the COVID pandemic numbers. That would be great for all of us to have the workers and staff and people come back to the market. Now, the unemployment rate for May of 2023, while it did bounce up to 3.7%, what was worth noting, and this data here is from the Bureau of Labor Statistics from the U.S. Department of Labor, and it was released here on June 2nd of 2023, showed an increase of 339,000 jobs in May. So I think what's worth noting, which was up substantially from what was projected. If I recall correctly, I believe the projection was around 200,000 jobs that would be added or increased, and it went up by 339,000. So a much greater increase in new employment. So unemployment still went up despite adding more jobs. What that means to me is that more workers are coming back into the workforce, or starting to get back to work, which is good for all of us. Because I can say for in the clients that we work with and that I'm speaking to, finding quality staff is still their number one issue that I hear people talking about, is finding and retaining employees. So just something worth noting here. And you can see this unemployment rate back in May of 21. It was just short of 6%. And today we're at 3.7%. So just worth noting there. Okay, next up is the U.S. inflation rate, and it's nice here. This is from tradingeconomics.com. It's the U.S. inflation rate for the Consumer Price Index, and you can see here this is a 12-month plotted bar graph, and it shows back in June of 2022 it was 9.1%, and now it's down to 4%. So we've seen this steady decline. Now, the one thing that that is missing from this is really a compounding type effect, because it's 4% over the growth of last year. So if I zoom out to a 5-year, you can see that last year, 2022, right around this time, was where it was peaking in terms of inflation rate, which was around 9%. And so when we're comparing a 9% growth, then that 9% inflation plus another 4% on top of that. So we're seeing that's part of the pain that people are seeing and feeling at the grocery store and really just about anywhere they're shopping is this inflation. It's while it's great that it's on its way down, right? We definitely prefer that. We still have to remember part of that is it's 4% over that 9% growth, which was over, and you can see here that big surge where it started growing here mid 2021 or so, or early 2021, where it was up pretty high there. So and you can see it looks like it was around 4% or 5% based off this chart, the best I can assess from the data that's listed. Okay, let's take a look now. Speaking of consumers, let's take a look at the Consumer Sentiment Report. This is the 10-year trend. Now, this is provided by the University of Michigan. It's called the Surveys of Consumers by the University of Michigan. We're going to look at that Consumer Sentiment Index. This is a rolling 10 years, and you can see that index has slowly been climbing up since about mid-2022. It's been bouncing up and edging up here, so it's right around 65. 100 is the index value of 100 is equal to what it was in 1966. So you can see that we're starting to see some improvement. And then I pulled up the 50-year to show you what the 50-year was. So we are back up over historical lows. And you can see we're back trending up to right about where we were during the 08-09 financial crisis that occurred there, and we're back up to we're trending up, which is good to see for the consumer sentiment. So not sure what your customers are saying, but word information for you to take and use. Okay, this next report is published by the Small Business Index, and this is a report presented by MetLife and the U.S. Chamber of Commerce. It's called the Small Business Index. Now, this is Q1 of 2023. We've gone over this same report the last couple of sessions, but it's the same data. It will be updated here, hopefully by our session, let's see, in July. We should have Q2 available at that point. But just as a reminder, Small Business Index, it's showing here at 60 is where it is in this kind of green section here. And you can see the trend that starting prior to the COVID situation, it was we were right around 70%. From 2019 to early 2020, we were around 70% for that small business index. It fell down to 39.5% for Q2 of 2022. And it's kind of been slowly rising. And then the last year, it's kind of been slow, just a slight decline. So in Q1 of 2022 was 64.1, and Q1 of 2023 was 60.0. So you can see it's kind of gone up and kind of trending down and kind of staying not giant moves the last 3 quarters here for us to take a look at. So just some food for thought there, and passing that along. Next is the number of business applications or new businesses being filed nationally. So they take all the state data for business formations that occur at each state and they aggregate it up. And what you can see here is this report is actually from May 12th of 2023. So this is really this is including through April of 2023. And you can see that the total new businesses formed were it was almost 434,000 new businesses formed in April of 2023. The next report is due out by June 20th. So here in a few days. I was hoping it might have come out a few days early so we'd have it for today. What I like to note here is you can see basically post-pandemic, a few months after the pandemic hit in 2020, just about every single month since then, there have been over 400,000 new startups that have occurred. Prior to COVID, you can see it was trending. The number had been trending up from 2005 it'd been slowly trending up to around 300,000 new startups per month. And so this is over 400,000 new startups a month. That means more than 5 million new businesses will be formed this year. 5 million. Okay. And why that matters to you as someone that's leading your franchise sales efforts, that matters because people have startup on their mind. The people are thinking about starting businesses and they are doing it. And while all of these 5 million startups that are getting going, will they all buy franchises? No. But some of them will, and some of them are. So just keep that in mind. Every prospect that's coming in has startup on their mind. So keep that front and center. And you may even, depending on where you are with your marketing efforts, your messaging may want to say something to the effect of have the idea of starting a business on your mind, consider a franchise. And you can say, a safer way to buy into a proven system or something like that. You can wordsmith it accordingly and run it past your team. Okay, so this is from the census.gov is where this data comes from, the U.S. Census Bureau Formation Statistics. It was released May 12th of 2023. Okay, next is the Small Business Startup Sentiment Index. I love this report. This came out June 7th of 2023. And this tells us what are these entrepreneurs and startups, these people these 430 some thousand new startups, what's the general sentiment of these folks? What are they thinking or feeling? What's the pulse say? And what headline here is, it says an uptrend seen in entrepreneur sentiment toward future startup conditions. 68.9% of survey respondents are more likely to launch their startups than 3 months ago. Okay, so that's interesting. So what they're noticing is that the sentiment of the people who are starting these businesses are thinking that it's more favorable to start now. And so it says 60.4% of respondents agree now is a good time for a startup versus, let's see, we have 60.4 say that they agree or strongly agree that now is a good time to start a business. You can see this line here for May is the highest it's been since August of 2022. So that's let's see, 1, 2, 3, 4, 5, 6, 7, 8 months. This is the highest it's been in 8 months. So I think all in all, that's a good sign and a bounce, because we had 3 declining months, or two months declining, and now we see a little uptick here. And so just worth noting that the people who are coming in, the leads that are coming in right now, are thinking more favorably. The remaining roughly 40% of those respondents are either neutral or think that now they think that now is not a great time. So that means 6 out of 10 leads, roughly, if we average this out, that means 6 out of 10 of your candidates coming in are thinking right now is the right time to really be digging into this, to buy your franchise. Okay. This is that entrepreneur's sentiment out. Let's see. Okay. So this is an interesting statistic just to show. It says that 72.6% of startups planned within the next 6 months that they're planning to open. So on the far right, I'll zoom in a little bit here. Let me see if I can zoom in. You can see that that this green line is this month. So this is May on the far right. And the green bar says that 17.9% of the respondents said that they're planning to open their business this month. 28.3% said they're planning to open in 2 to 3 months. 26.4% said they're planning to open up in 4 to 6 months. 11.3% said they plan to open in 7 to 12 months. And 16% said it's longer than a year, or they just don't know for sure. So that's roughly 17.5% are greater than 6 months. The balance is going to be looking to get, I'm sorry, not 17%. I'm sorry, my math was off there. Just 27.5%. It is thinking longer than 6 months. So you know, ballpark numbers, about 7 out of 10 or so are thinking that the next 6 months is when they want to get that business started. Okay. Now, here are the biggest factors that consumers are saying they're concerned about when starting a business. 67.9% say that funding or access to credit is their biggest factor to starting a business or getting it going. And by the way, that's been the number one factor for years now, the number one driver, even despite all of the economic conditions, despite the COVID scenario. There were spikes in some of these areas, but access to funding or ability to get credit has been the number one concern and continues to be the number one concern. 49.1% said that the economic climate is a concern. So that was a big spike between last one. I'm going to zoom in here. That was a big spike. It was a pretty big jump. It looked like that was maybe around about 37.5% or so last month, and it jumped up to 49% this month. So a pretty big spike there, and the highest it's been since over a year. The number three biggest concern is regulatory changes. I'll arrow over here. So you see regulatory changes, that's 19.8%. Tax law changes at 18.9%. And then we have 16% is political changes, 9.4%. So far above and away, funding and access to credit's number one. And number two is economic climate right now. So these are the things people are talking about. So as a franchisor, as a franchise marketing or sales professional, make sure you've got a solution for funding. How are you going to help the candidates get funding? That's on their mind. That 2/3 of them are worried about that. And about half are concerned about the economic climate. So if your business or your industry is one that tends to be perform in a good or in a poor or quality economic condition, talk about it. Or if your business or industry tends to decline with a declining economy, then what you need to do is talk about your plan for how the company is going to help the franchisees through those conditions. Lastly, if you're especially a fixed location business, if they're concerned about economic climate, right now is always going to be a great time to buy into a franchise. If we think economic climate may go awry over the next 6 months or 12 months or so, for a fixed location, by the time they buy the franchise, find a location, sign a lease, and start that process, that could easily be 6 months, if not a year or 18 months. So if the economy goes south and you're, let's say, a restaurant or a retail business, there are going to be a bunch of businesses that will unfortunately close. And now that owner could maybe buy an existing space that they can reduce their build out costs associated with it. So just some things to think about to help the franchisee understand. We're not trying to bamboozle them here. We do want them to be thinking about this, though, because there are ramifications that, while as a whole an economic condition may worsen or decline, it does provide opportunities for startups in this regard. Okay. How does the pandemic affect your interest in business ownership? The number one category here, 51.9%, said it reduces the amount of capital I have to invest. So that's the big one there to list, and it has been that way for quite some time. Let's see. Here we go. Age of buyers. So I like this chart here. It shows that for the month of May, 50% on the nose, 50.0% of all potential startup owners were from Generation X, born 1965 to 1980. The second largest category was millennials, born 81 to 1996, 35.2%. And then the third largest category is the baby boomers, and that's at 12.0%, 1964 to 46 to 64. And you can see that as millennials have tended to grow, you've seen boomers start to shrink, which makes sense as boomers are retiring and millennials are coming up to up of age to have enough working history and access to assets to open a business. And Gen X has consistently been half or so of the buyers for quite some time, for several years now. Gen Z is just getting into the buying, opening up of new business. They're at 3% right now, and we'll start to see that number continue to grow as well. Not as significant right now as Gen X and Gen Y, but Gen Z is on its way. Okay, so that covers that report. By the way, this I think I had mentioned that this is the franchiseinsights.com. This is the Small Business Startup Sentiment Report released on June 7th, 2023. The next report I like to show is from franchiseinsights.com. This is a new report. They released this report. They've released a version of this previously. This is an updated version, and it says a dependable source of lead referrals to your franchise development website. And so this is a little bit of a plug for franchise portals, websites like FranchiseGator and FranchiseOpportunities.com and similar. Franchise Ventures that owns FranchiseInsights.com owns several of these websites. And it shows that 71% of portal leads visit your franchise website afterwards. And then, let's see, then 71%, and then 26% of those franchise portal leads, then visits 70 of that 71% that comes to your website from the portal leads, 26% submit another contact form onto your website. So I think that's just worth noting. So it's something that portal companies and leads have talked of for many years. It's nice to see data to verify. And having been in franchising, I've recognized this to be true as well, even without the data, where we have a client that starts marketing or advertising through franchise portals. Prior to that, they had maybe one or two leads through their website every quarter or every 6 months. And all of a sudden, portal leads start going, and all of a sudden we start seeing 2, 3, 4 leads through the company website every month. And we see a large uptick there. And so we've definitely seen what appears to be a correlation, but couldn't validate it. And now we can see some data here through what they've produced. The next segment here, this report to me is always one of my favorite, and they've been publishing this. This is the 4th year they've done this, and I'm so happy that Franchise Insights does this. And as a franchise salesperson, franchise marketing person, you have to be aware of this. This, to me, it cannot be understated, the significance of this. Franchise prospects consistently focus on just a few concepts for research and contact. So as of April of 2023, and you can see these numbers are very consistent 4 years in a row, 41.6% of all franchise buyers inquire about one brand. 4 out of 10 leads that are coming in are inquiring about your concept. That's it. Then 16% inquire about 2 brands, and about roughly 10% inquire about 3 brands. So if we add all of these together, what is that? That's going to be 25, 65, 60. So it says 57.7% look at 1 or 2 concepts. And then we're looking at about 66% or 67% of all leads of all buyers are looking at 3 brands or fewer when they're coming in. So it's not like people are looking at hundreds or dozens. They're looking at most at 3 on average. So as a franchise salesperson, as a franchise marketing person, recognize that the overwhelming, more than half are looking at just 2. It comes down to your brand and 1 other most of the time. So keep in mind how you're approaching the process with that. And the final chart I always like to close with is the franchise data category. So the most active franchise categories over the last 90 days. So these categories on the aggregate of their websites, these categories of businesses have received the most inquiries in the last 90 days. Again, this is franchiseinsights.com, franchising by category. So home services is the leader again at 21.3%. And this number it was over 20% for quite some time. Then it dropped below, I think, 18 or 17%, and now it's back up to 21%. Senior and health, 18.3%. Business services, 13.4%. Cleaning and maintenance, 10.6%. Food and restaurant popped up again. They're over 10%, 10.2%. Child related, 4.7%. Financial services, 3.3%. Pet, 3%. Education, 2.7%. And beauty, 2.4%. Those are the top 10 categories. And you can see these top 5 are the only 5 over 10% of leads coming through. Now, what this means is if you are in one of these categories, you should expect to see have a much easier time getting enough leads coming in. If you're not in one of these top 10 categories, and especially those top 5, it just means you may need to have more lead sources and more lines in the water trying to catch those fish and bring them in. So that is the session for today. Thank you for everyone joining us here. And I'd love to open things up if there are any questions, comments, thoughts, ideas, suggestions that you'd like to add. Please feel free to hit the raise your hand feature or type it into the Q&A section or chat section. And I'd be happy to answer any questions you might have before we go for the weekend. All right. I'm not seeing anything come in here. So I'd like to thank everyone for participating. Happy Father's Day, by the way, to all you dads out there. Hope you enjoy some time with your family and loved ones over the weekend. And for those of you able to celebrate with your dad or give honor to your father, hope you have an opportunity to do that as well. Thank you, everyone, for joining us. We will have this recording live. Please check out our website, bigskyfranchiseteam.com. Go to our blog. It will be posted there over the next few days. Our YouTube channel or our podcast, Franchise Your Business. You'll find this available shortly. Thank you, everyone. Have a great week, and we'll see you back for this session next month.